Well, hello, everyone, and welcome to Risk. I'm here with James, and we have a special guest, Professor Dave Collum from Cornell University. Welcome, Dave. It's great to see you again.
Glad to see you guys again.
So it's been an interesting year in the markets. It just seems like everyone is in just complete denial of reality. You know, the markets have rallied and rallied and rallied, and just the whole world seems to be falling apart on us. You know, goods are tied up in ships. People are just unemployed. They're not returning to work. So many companies can't find people to work. It's just everything is a mess. So what do you attribute this disconnect to?
Well, you know, I can easily laugh off the markets as these things that are being juked by vast quantities of bailout money and stuff like that. So that's the easy part. What I don't understand is all the broken supply chains, which I would have thought would appear last year, and now all of a sudden they're appearing now. And so you got places like the UK where 90% of the gas stations don't have gas, and the grocery stores are emptying. And why now, right? Why all of a sudden out of the blue? And I've been watching supply chains breaking all year. And they seem disconnected. So, you know, you get the hacker of the pipeline, and you get the Mississippi River had a problem with some bridge, and you get the boat that wedged itself into the Suez Canal. And next thing you know, you're going, you know, every one of these stories is a supply chain story. So now all of a sudden the supply chain seem flat out broken. And they always say, oh, it's the truckers. I'm going, well, these guys got to put food on the table. I don't get it. Where are they? What are they doing? And it's not like $200 a week from some state payout is going to cover anything. So there's something. I have this maxim that I created that says basically when the data is not making any sense, your model's wrong. So it means we're at the wrong layer of the onion. And I don't know what layer it is. And for me to find a coherent one, I go so dark. And the one that makes most sense to me on this is that maybe China and Russia are colluding to slow walk the supply chain.
It could be beyond just China and Russia too doing that.
Well, it could be. It really could be beyond China and Russia. And people say, well, you know, why would they do that? That would hurt them too. And I go, these guys play a long game, right? The Chinese can take pain for quite a while. The Russians have been taking pain for hundreds of years. And so if they think, and they know we're a bunch of wusses.
Yeah.
And so I don't have any problem with the idea that they got their foot on our throat.
Oil's gone up. Oil's up today. It's definitely benefiting Russia. Do you really think that Russia wants to, you know, step on the hose that's, you know, funneling, you know, a lot more money towards them, you know, right now? Do you think that they're, you know, or, you know, what sounds a lot more logical? Do you think that internally we're creating turmoil?
What if Russia is got their foot on the hose, knowing that another month or two of this, they'll get twice the price? What if China wants to put us down, which we know this is a big Cold War. Russia's a pawn in this thing. Yes, this is China, exactly. US stuff. What if China's saying to Russia, I'll tell you what, we'll buy all your oil, right? Don't worry about us. We'll take care of you. It wouldn't take much to bribe Russia. And so the long game is, you know, take a little bit of pain now and pay later. So that's my best model. It doesn't make sense. There's all sorts of things that don't make sense. You know, Afghanistan pullout doesn't make sense. Firing workers doesn't make sense.
Yeah, what was your take on that whole thing with Southwest Airlines? I mean, I read today that basically a whole bunch of people called in sick ahead of this mandate they have. I mean, it was just completely disruptive to everything.
But the Biden administration, the one thing that seems coherent is that everything he does seems to be designed to hurt us. If they follow through with this idea that if you're not vaccinated, you don't work, isn't the due date of that something like October 15th? Am I remembering that correctly?
I believe it's the day before Thanksgiving.
Oh, that's a clever move. And so let's say they hold their ground on that, then so what's the vaccination rate in the US? Maybe 70%. Some number of those people will cave, some number won't. Let's say half cave. We're still putting 15% of the population out of work.
Right.
That will send us into the Great Depression overnight.
So how do the markets stay up with that?
Oh, JPO and the Jets, right? They're just cranking. You got BlackRock, which I keep wanting to call Blackwater for good reason. BlackRock completely overtook everyone as the Death Star of finance, right?
Right.
And so then the question is, what's going on there? I don't. The markets are insane, right? I read Hussman, monthly letters. They make more sense than anything else I read, and they're dead wrong so far. But I can't refute any of his arguments. None of them. They're all spectacularly lucid arguments.
And what's wrong is what he's forecasting not coming to fruition, or?
Oh yeah. So he talks about valuation, and he's gotten better at sort of playing the old look. Just because the valuations are absolutely outlandish doesn't mean that they can't get more outlandish. And he realizes that he's got to use other parameters, and he's licking his wounds badly. When he turns out to be correct, which I think he will, it's going to be an epic secular bear market. And I have this definition of a correction. We need a correction. Morgan Stanley came out and said, we're going to have a 5 to 10% correction before the end of the year. I go, way to go out over your skis, dudes. That's a bad day. That's a bad day, right? Yeah. And I said, here's how you make a prediction. I said, inflation adjusted, we're going to have a correction that's in excess of 65%, and it could span many years. I said, that's how you make a prediction, guys. And so my definition of correction is you have to correct the asset in question or the assets in question significantly. And you have to adjust investor attitudes significantly. And then the question is, when was the last correction? You go back to March of 2020, you go, no, not even close. Investors learned that if you hang out for 2 months, you're fine. You go, 2008-9, you go, no. They know that if they rode that one out, a year or two, horrible crisis, year or two, you're fine. You go back to 87, what a joke 87 is.
Yeah.
87 says you wait 15 minutes, you're fine. And
you mentioned 87 and being kind of a blip on the radar. I must say that I was in school at that time up in Connecticut, and some kids did not return because of that. And there was a big condo bubble up there as well at that time. So
but the collective market was taught that the Fed will save us. Yeah. So you get back to the last correction we had that fits my definition was the 67 to 81 secular bear market. That was a 75% inflation adjusted correction spanning 14 years.
Yeah.
By the end of that, the best treatise I've ever heard on that was Raoul Pal before he became a crypto head. He described what it was like to be sort of in the equity game in 81. And he says, you just could not give these things away. There was just zero interest in equities. That's the secular bottom. We haven't had a secular bottom since then.
In a very long time. That's very true.
Right? And we've got stagflation now, that transitory my ass. I mean, there's no chance. If you were bidding a job for next year or 2 years from now, would you be not putting 8-10% sort of annualized costs on your bid? Unions are picking up
at the very least.
Labor. I don't even know how you'd bid a job. My dad he owned a construction company. He used to bid jobs, office buildings. And he said the beauty of a union contract is that you had a predictable labor cost. And that made bidding jobs rational. The unions right now are very weak, and if they get strong, the labor's not getting cheap. And so you can't predict it. And so the inflation expectations are soaring.
All right, now I don't know whether you think that this is the elephant in the room or not, but anywhere between 1.5 and say $5.5 trillion in money that they want to come out with. How do you think that this is going to play short term, long term?
It's most of it's going to be graft, and so I don't think it'll do much, right? They're not going to give it to we're not going to be creative. Small business has been wiped out.
Devastated. Yeah.
I did a tweet one day where I said that it's basically was a bear market raid on small business. COVID
Right.
was. And then
Sure.
Carol Roth, who wrote a book on the entire subject, chimed in, and Carol and I have been chatting a lot since then. But it was a complete wipeout of small businesses, and that's where the growth is. So now the S&P has done basically a hostile takeover of the economy because they didn't board up, but everything below the indices got whacked. And so one of the arguments for the indices being more valuable, one of the arguments which I don't think is a strong one over all the bad arguments against it, is that the S&P has absorbed a larger percentage of the economy into the index.
Destroyed pretty much
Right.
a huge section of.
So Linda's Diner, which is now out of business, the customers are going to Chipotle, which is in an index. And so the indices have benefited at some level. Now, I would say that's a micro gain
Right.
compared to the profound overvaluation. I'm going to write about valuation again this year. I'm going to go at it with a baseball bat again. I did it in 18. I'm going to do it again.
Do you think the market? Do you think the market's going to beat you at reducing that valuation over the next?
Well, I'm still going to write about it because I'm going to say, look, I've been on record for 10 years that they're overvalued. So don't tell me they're down now. The market might beat me. You know, I was chatting with, oh God, what a wonderful world the digital world is. I was having a quick email exchange with Einhorn this morning, and he talked about AOL being on a podcast he was on. That's what triggered the beginning of the exchange. AOL gave sort of authority to bid every stupid idea up to the roof. That all of a sudden, I think now, and the hodlers are going to give me hell for this, but I think Bitcoin et al. Have done the same thing to this generation, because if you got a generation that's seen you can make unbelievable sums of money without having any justifiable revenue stream. It is purely price action.
Yeah.
And you can be all weepy-eyed about how it's going to be the currency of the future, but it's never going to be a revenue stream. It's just a price. And so I think in some sense, people are treating equities, GameStop, right? All these crazy meme stocks as it's kind of a Bitcoin world. And that won't work. It might work for Bitcoin. It's not going to work for companies.
You know, I have to add, a lot of people felt that way about silver with Wall Street Silver. They really thought that it was just, you know, we short the shorts and it would rip. And I'm like, it just doesn't work that way. You know, you're investing in something that is value, and you're buying it at a low price.
So here I bought more silver after one of your podcasts. Might have been one I did in Wall Street Silver, but I went into silver. I went into PSLV. And to contribute to the squeeze. But I remember I said something like it didn't work, and you guys said no, it did actually. It is working. They're absorbing supply. Yeah, it still is. So the upside is at some point the price breaks through, right? When you least expect it, boom, you can't get silver. You better bid that sucker up or you're not getting it. And you know the electronics companies will bid it to whatever they got to bid it to get that silver.
Right.
And so I think that's a serious argument for silver. The risk to me, the risk is that if there's some mechanism by which all this investment grade silver that's being absorbed by Sprott somehow gets liquidated back into the marketplace.
Yeah.
What a wipeout. So if Sprott says we're selling off PSLV, boom, you better not be long silver that day.
Well, you know, the counter argument to that, though, is theoretically the people, Sprott is actually holding for people who bought into their fund. So they would have to sell. Yeah.
I guess, but then it's a closed-end fund, so there's no silver liquidated.
Yeah.
The question is, does Sprott somewhere deep in the prospectus have a mechanism to liquidate Sprott? And if they said, okay, here's all your money back for all your shares. Yeah. And we're liquidating the silver. Oh my God, what a bear raid that would be. right? So and with respect to the hodlers, I think the bear rate is the stable coins. I don't want to talk about hodling except for the fact that these Tether and these things, they look like a freight train coming towards the hodlers to me.
And,
So
you just look at the number of digital coins out there, and it's
that's the other thing is
Yeah.
Bitcoin's going to get beat by another digital coin if it gets beat, and they're also not serving as a currency, right? They're serving as a speculative toy.
Right. You
So,
know, there are so many of those digital coins. They all talk about these projects, but none of them really have anything underlying of any value. You know, so they're, you know, I don't know. You go back to '99. You know, they all seem to be the web van of digital currencies. You know, that's the way I've been looking at it. You know, at least Bitcoin has.
Yeah, Bitcoin.
I'm sorry?
That's right. I thought you were going to say Bitcoin didn't either. Bitcoin has networking, right? That's the argument. They have networking. But what
Well,
happens if a cooler one comes along and all of a sudden it gets bid up and Bitcoin gets bid down, and you know?
I mean,
It's not
Bitcoin's
like-
also one of the oldest technologies in the space, right? It's the
Right.
only one.
Right. It's the Eastman Kodak of hodlers. And then the question is, is BlackRock and all these crazy speculators, are they going to stay in Bitcoin when that happens? Probably not, right? So they'll
What are they going
first
to do with
squash
their What are they going to do with their investors who, you know, are in Bitcoin?
throw them under the bus. They always do. Well,
They do.
that's a universal truism right there. Yeah.
Well, you
Always
look
hurl
at
them under
what
the bus.
Robinhood was doing to their investors. I mean, they were basically
Yeah.
trading counter
Yeah.
to them, you know?
Yeah, the one thing we know is if you're retail, you're going to end up under the bus. You're going to be looking at axles and axle grease, you know, and you know, you might be getting dragged behind the bus before it's over. So we know that.
So Citadel didn't create Robinhood for an altruistic purpose?
I don't think so. Yeah, maybe they're not. Maybe they're not for profit. You know, they hired Bernanke. That's a charity move.
No doubt. So when does all this irrational exuberance too fade away? I mean, do you see it happening anytime in the next few months, years, or can it go on for a long time?
I think real, live, undeniable inflation is a thermonuclear warhead.
And that's here.
I think they've been able to pretend that the inflation is tame when it's not really tame, and now it's this roaring stagflation.
Yeah.
Right. So I think the next recession, right into the teeth of stagflation. You know, if the markets can hold up against that, we should just quit. We should just I don't know what, buy a condo in an old folks home or something.
I was going to say buy an S&P fund, index fund, and just go retire somewhere.
Yeah, it's very hard to go unbearish after you've been bearish. I hope, you know, and people say, well, you know, you missed the last run. And I go, the markets never got cheap in 09.
Very true.
I had a fabulous run from 2000 up to, from 99 up to 2009. I had an unbelievable run. I compounded from January 1st of 2000 to December 31st of 2009. I compounded 13%. That was the decade from hell. But then I missed the entire run on the equity markets. But I think, using Husband's logic, I think they're going to give it all back. I think it's all going to be hit. And then some, maybe, yeah, because it wasn't even cheap in 09.
What do you think the biggest sign of, you know, danger is really, you know, coming close? Do you think Microsoft hitting 500, or, you know, Amazon hitting 10,000? You know, like, what do you think is going to really?
I think when they hit 10, I'm a believer in the market narrowing model, and it's awfully narrow right now. I think when the entire market is being floated. Yeah, I did an analysis last year of overvaluation. Instead of focusing on the market, I just focused on the FANGs. I went FANG by FANG by FANG by FANG and looked at them as a business concern. And Microsoft was the best. But Microsoft's fivefold gain in the last, I don't know how many years it was like a decade, is all PE expansion. It's all PE expansion. And then I look at Netflix. I go, okay, here's Netflix. Netflix loses money, except for in 2020 when they had no R&D because they weren't making anything. And
Right.
people were sitting home watching Netflix. So they finally made some money, but they have to spend a ton of money to make content. So Netflix could drop 99% in value. And they would then be a small cap that still loses money.
Yeah.
How do you value that company? I don't even know how to value it. And then, you got Salesforce.com that was considered profoundly overvalued a year before it got put in the Dow. And you go, well, they were a cloud-based. Now need cloud-based. They go, how about Google, you idiots? If you're gonna go to the Dow with a cloud, you Google.
Yeah.
Google's been cloud-based.
What's that?
Google's been cloud-based since the beginning.
Yeah, but they're not in the Dow. Then they replace Exxon with Salesforce.com. They take Pfizer out the year that Pfizer saves the world, supposedly. Right? This is just insanity. And so, so for me, the buy signal, I've actually invested some, and the buy signal was first when Exxon got booted from the Dow, and I go, boy, that's a buy signal right there. And
For
then
Exxon. To buy Exxon.
Exxon and energy. And then Jesse Felder thankfully pointed out to us that the S&P had gone from 16% energy to 2%.
Wow.
I go, that's a buy signal.
Yeah.
And so I in December of last year, while I was writing my annual thingy, you can actually see the transition, because there's one part where I'm talking about, I'm thinking about it. Then later on, it says I just started buying it. I started buying energy. And the other bet on energy is that, and if anyone's listening, to send me an email if you can answer this, but I don't think wind and solar are energy positive. I don't think in the lifetime of the solar cell, in the lifetime of the wind turbine, if you add up all the energetic costs to make them, I don't think you break even. And so, and they're sure as hell are not like pumping oil out of Saudi Arabia.
This brings a question to mind. I've been thinking about this all day. It seems like the world is just denying science everywhere.
Denying it. Totally. The COVID story should wake us up. The COVID story is full of bullshit. There's so much bullshit. It's not to say there isn't truth in there, but there's so much bullshit in there. And I don't see how, and I've told you guys, I think on your podcast, that I dug into climate change and concluded it was total crap. And the first thing I discovered is I was not alone. There's very famous scientists who've called it a complete hoax. And that's what everyone gets told. No one of any credibility doesn't believe it. And then you dig in, you find, well, there's about 18 Nobel Prize winners right here who say it's crap. Yeah. And then you go through COVID and you realize that everything we were told about vaccines and the disease, it's all questionable shit. It's not that there's not a disease. It's not that the vaccines don't do something, maybe, but there's just a huge amount of lying. And we realize we're in the age of narrative.
Yeah, we're back into the days of Copernicus.
Well, we're also in the days where they don't even have to worry about whether they're lying or not. They just got to get the media to tell us over and over and over what they want truth to be.
Yep.
So,
and most people will parrot those talking points.
As of last night at dinner, someone parroted those talking points to me, and I lost my shit. My wife says, "Your voice is rising." I said, "Because this is fucking stupid."
We turn it around, can we?
Well, the debt alone could be enough to polish us off pretty badly, right? For quite a while. I mean, we still have land, resources, open spaces. We still have what are really real capital.
Well, let's talk about this now, because our government has sold off all these bonds internationally. I mean, how many bonds has China bought?
Well, we might have to default.
Well, here's the thing. Like, do they have a claim on our property? Like, hey,
unless we say they don't.
and right? Then it comes to tanks and missiles.
This is the Rickards gold model. He says, yeah, maybe the gold in Fort Knox has someone else's name on it, but we're not giving it up.
Do you really think we still have it?
Well, I don't know. The lack of audit. This is a debate we haven't had for a few years. But yeah, that's a good question. I don't know.
Didn't Germany ask the United States for their gold or silver back, and we declined?
I think they got it, but I don't think they got it from federal sources. Somehow, Germany, what was that? That was about 5 years ago. Germany asked for their gold back, and we had a bunch, and France had a bunch, I think, and I think they eventually got it. So I don't know. Good question. Good question.
Flown on a jumbo jet in the middle of the night on a pallet.
Yeah, yeah, yeah. That plane would have trouble lifting off the ground, right?
Yeah, that's true. So,
Yeah.
so what are you doing with your money these days? Are you still buying into silver?
Well, my wife still has an Amazon account, so that's a big perturbation. I bought more PSLV. I've started investing again, baby steps for me. I never, you know, if you do Stan Druckenmiller's, you're going to lose to Gambler's Ruin, right? Gambler's Ruin basically says when the house has more money than you will eventually be hit by the black swan sooner than they will. So you
Yep.
can't win, eventually get wiped out. So for every Druckenmiller, there's some guy who's a smudge mark on Wall Street. And there's 1,000 of them. And so you can't be making these big bets. So I ease in. It took me years to get into energy. And then I left it in a heartbeat. And it'll take me years to get back in. But I'm investing in natural gas equities, partially because I have a Fidelity account that I have no control over otherwise. So I got to do it. I have other accounts where I can do creative stuff, but the Fidelity account is Happy Meal menu stuff. And so I'm into materials. I bought some Rio Tinto, which I've been told might be a bad idea because we're at the top. But if inflation runs, I think you got to own stuff like that. They've got a 5% dividend. They've got cash, net cash on the balance sheet. Somehow this makes sense to me. It's a little tobacco stock flavored here. And I bought a couple of platinum companies. If you look at the premier platinum companies, they are net cash, low PE companies. Fred Hickey convinced me to buy gold miners, even though for years I hated them because I said, look, you can tell me they're cheap all you want, but until they learn how to make a penny, they're not cheap. And then Hickey gave this talk one day that he said, he started citing the numbers. I go, holy shit, these are cheap. I looked them up, and Kirkland Lake I bought, it's up like 50%, which I don't care because 50% today can be a collapse of 50% tomorrow. But Kirkland Lake has PE of 11 and cash on the balance sheet and a decent dividend. And I go, these are real companies now. These are not just promises to produce gold at some point in time. These are not options.
How do those valuations compare to the FANG stock study that you did last year?
They're a little bit lower. Like in the 1930s, Homestake Mining was the big winner, right?
Yep. I actually owned Homestake Mining in the late 1990s.
Really?
They got acquired. It was probably one of my best investments ever because
my most profitable WorldCom.
Oh, really?
I made sevenfold on WorldCom and got out.
I was going to say, did you short sell it?
No. I bought WorldCom. I had a friend who was a traveling salesman. I know there's a joke in there somewhere, but he's a traveling salesman. Went from company to company to company selling chemicals. And he would take executives out. Pretty soon, everyone wanted to go out with him because he'd go out to lunch and he'd talk stocks. But he was like this conduit of information. At one point, I said, "Is this legal information you're giving me?" He says, "Totally." But the CEOs would start talking, and he would go, and everyone wanted to go to lunch with this guy. And so one day I went to lunch with him when he came to Cornell, and he says, "You should buy this small company that sells bandwidth called LDDS." This was back in, I don't know, 94 or something.
No one even knew what bandwidth
in
was.
Mississippi. No, and this was in Mississippi, and the thing grew into WorldCom. And then because of the .com bubble convincing me that there was no winners in this group at this point, I exited WorldCom. I exited WorldCom and Dell, both with 700% gainers.
Wow, that's crazy.
I think I remember when LDDS was. It was LDDS, MCI, and then it became WorldCom.
Yeah, something like that. There were a lot of mergers. That's right. And Bernie's probably still in jail too. But that was that was the market screaming bubble. When Dave is in those things, then that's a problem. And I didn't know what I was doing. And then I rolled from that to cash and gold in '99.
Good time to buy gold.
Well, but for about a calendar year, I felt like a complete idiot because gold just kept drifting down towards 256,
Yeah.
and the Nasdaq just kept soaring. And I'm going, dude, you got James Grant telling you, got Bill Fleckenstein telling you to buy gold. The rest of the world thinks they're nuts. So is this a good idea?
I was a huge Fleckenstein fan back then. I used to read his column all the time.
I still do. I
And,
still
yeah,
do.
and it's been a privilege to be able to talk to him personally a couple times.
Yeah, exactly. And so I still, I have email chats with Bill. He's still, these guys are generous with their time.
Yeah.
I really appreciate it. And so Bill made me a lot of money by convincing me to buy gold. I almost got scheduled to have dinner in a week and a half with James Grant, but he couldn't make it. And I'm going, shoot me now.
Yeah, too bad.
But the dinner, I believe, is going to include Danielle DiMartino Booth, and whenever we get together, it's just, you can just bring the house down when we get at the table and there's just two unfiltered bastards there just wailing. I've had several dinners with her, and it's just, Lance once said we should have taped dinner.
I would pay to listen to that. I really.
Well, this guy Adrian Day.
Yeah, sure.
He invited Danielle, Bookfire, Grant, and me, and I'm going, okay, there's an outlier in this group. Who would that be?
Yeah, Adrian Day is a longtime legend in the space.
Well, I asked Bookfire if he's going to go, and he said, no, I can't make it, but you should go. It's a good opportunity. So I said, okay. I thought I was getting my leg humped or something. Right? But he said, no, go. So I'm going.
I was going to ask you what your thoughts are. I'm sure you get asked all the time about the future of central bank digital currency.
Are you talking about the central banks going pure digital and getting rid of cash?
Yes.
Well, they want to. They sure as hell want to. So I got to figure that they're going to. If they want to, they're going to. That's like mask mandates and shit, right? Yeah. You get foreshadowing, it's coming. Nothing's going to stop them. So I think they'll go to pure cash, pure digital. The Bitcoin guys think it's going to be Bitcoin. I don't think so, dude.
Yeah, I don't think so either.
They're not.
Control. They want control.
They want to be able to create this shit at will. Yeah. And then the question is, do the hodlers get taken out the kneecaps? And I've had some very smart guys tell me no, and I've had some very smart guys tell me yes. And what I do know, so I did a hodler podcast with a couple of prominent guys who are really respected in the hodler world, and they were trying to convert me. I felt like it was like a couple of guys with Bibles on their arms at my front doorstep, and they asked, what price would get you into Bitcoin? I said, it's not a price. I said, there's going to be some moment where there's the battle of the bastards. And then it will be clear that Bitcoin will either be destroyed, rendered irrelevant, or survive. Right. And I said, that might be a low price, but also a key moment where I become the believer. They want me to be a believer. I'm like a mark to them. I don't know why. My Twitter feed is full of hodlers. And for the most part,
James is definitely more of a hodler than I am. I'm just completely not sold on the.
So we should just boot him off the Zoom and just chat then. There's a book, by the way. It's by a guy named, I think, Patrick Wood. That's key to know if anyone wants it, because I can't remember the title, but the word technocracy is in the title. The premise of the book is kind of a unifying premise, and that is that back in the 30s, they thought that in the throes of the Depression, they thought that we have to run the world different, right? Because the capitalists have obviously screwed the pooch. And they thought we need a top-down approach and we'd let technology help us, right? So that was the idea. In the 30s, the word got invented, technocracy. And then it went dormant. I have this theory that FDR was not as bad as the right thinks, and that he just knew how many compromises he had to do to let the capitalists keep going. That's my suspicion.
But here's the thing, and the word capitalism gets thrown around so much, but
What we're doing now isn't capitalism.
but even back then, I mean, the
Thank
Federal
you.
Reserve was not a capitalist invention. I mean, that's
Nope,
total
nope.
central planning and
Not a lot of price discovery in there, right?
yeah.
Let's just set the price of capital.
Yep.
By the way, Biden's Secretary of Commerce is a devout communist.
Yes.
She's not a communist metaphorically.
No, she's a member.
communist.
Yeah, she's a member of the
She's
Communist
a-
Party. Yeah, I know.
Yeah, she came from Kazakhstan, right? Let's just get to it, right?
Where did she go to
And
school?
she thinks, Cornell, I'm told. She's a faculty at the Cornell Law School. You know that. You can't. She's a faculty member of Cornell Law School.
Oh, no.
Well, you got to have commies on your faculty, or you're not a college, right? And so, and so she thinks that the price of key assets should be set by committee.
Yeah.
I go, oh, that works well.
Yep.
That
Yep.
works really well. Now, the Federal Reserve seems to sign off on that model. You know, the most important commodity of them all, money, should be set by the Federal Reserve, according to them.
Did you see that article in Zero Hedge today with the interest rates being at 5,000-year lows, and they show this chart? I mean, that's just,
I've seen that chart. I'm behind in my Zero Hedge reading because I've been sorting my notes, trying to figure out how to write my annual review. But I will read Zero Hedge tonight, so I'll see it.
no. I mean, it's just a completely synthetic world we're living in.
You know, there's guys out there who hate Zero Hedge, and I go, if you gave me one website, that's the one.
Absolutely.
Could you possibly choose a different website than Zero Hedge? Now you have to bring a filter. They get stuff wrong,
Of course, yeah.
but they call stuff out. And sometimes they're way ahead of the curve. Way ahead of the curve.
No doubt. No doubt.
And one time I searched my name at Zero Hedge to see if I'd missed something where I was being talked about and didn't know it. And I had actually. 61 hits. I'm going, holy shit, Dave. That makes you a card carrying Russian implant.
So, are you taking odds on Jay Powell or Clarita?
Is that a venereal disease or is that a Fed governor? I think JPO's in trouble. If he talks like a Fed governor should be talking, he'll get ousted, right? If he's been talking about tightening up more, wasn't chlamydia or whatever his name is? Wasn't he one of the day traders?
Yes.
Well, he's not gonna get in there then. He's gone. He's gonna be out of there.
Hey, you know, my theory on Powell, they're setting him up. They know the market's going to collapse. They know everything's just going to end badly, and it's
gonna hang it out.
all like this, finger pointing right at him.
For all we know, he's agreeing to take the hit.
I'm sure he's going to get paid off well for it.
Yeah, he'll work for Citadel.
There you go. Or BlackRock.
He'll give talks, or BlackRock,
Okay.
or he'll be on Janet Yellen's payroll. No, but we got 3 out of 12 Fed presidents who are day trading Federal Reserve moves, right? That's a problem, I'm told.
Dave, we've taken so much of your time. We really appreciate you joining us. This has just been a phenomenal conversation, as I expected it to be.
Yeah.